What's going on, guys? Ace of Trades back once again with another video. I know it's been a little while, but work commitments and business commitments and stuff take priority sometimes. However, today's video is going to be short and sweet. It's going to be showing you one example and a really nice trade that I took that you can be able to see on my Instagram. Taking advantage of the new high time frame entry model that I've been trying out with my friend KH Capital. Essentially, it gets rid of the noise on the 1 minute. I know a lot of traders that have switched over to the 50-minute recently. I myself was a bit hesitant at first to get into it, as I've been trading on 1 minute for the best part of 18 months. And I have good weeks, I have bad weeks. The majority of it seems to be in a bearish trend, if I'm being completely honest. So I've switched over to, not completely, I still trade GU on the 1 minute, but I've switched over to trading a couple of pairs on the 15-minute. Because I find probably 80% of the time my high time frame, so my daily, my 4 hour, my 15-minute narrative is correct, and then I'll go into the 1 minute, I'll get swept. I'll take break evens, and then it runs off and it would have hit my TP. So obviously that messes with your head a bit. It's quite bad for psychology. So essentially what I've done now is just started trading off straight off the 15-minute zone. So let's get straight into the video without further ado. So for this example, I'm going to be choosing the EURGBP trade that I took. I believe it was the 5th or 6th of June, one of the two. There was two trades on 2 different days actually, so it might have been the 5th and the 6th, thinking about it. So the first thing I did essentially was pretty much just what's the trend? The trend is bearish or bearish, so ideally I want to be looking for shorts. So what I did here was just found a POI in the leg of this, and essentially, it could have come up to any of these, but when we get down to the 50-minute stuff is when I look for the confirmation and obviously the entry. So this is a clear order block or supply zone, as some people like to call it. There's a bit of a chain coming from here, which essentially will be a flip zone from something all the way to the left. What we've got here essentially starts at this, well, it's essentially a demand zone. So there's a flip zone there. I know it's a valid POI. You also break mine a 4 hour structure as well, but I'm not really focused too much on that at the minute. Okay, so jumping into the 15-minute, which is now my entry time frame. Over here, we can see the 4 hour mitigation. Now, the first thing I'm going to look for is a change of character. So essentially, what a change of character is these lows, if we continue in the 15-minute bullish trend, because obviously we broke this high, we pushed higher, we've now got the higher high. We'd expect the lows to obviously be intact, but we know that this, where's it gone? This 4 hour low, essentially when we start to pull back, is going to become weak, and we're going to be trading off a strong POI anyway. So the market's in our favour, and we all know the saying, the trend is your friend until it ends. So we want to trade with the trend. Essentially, you do get a little liquidity sweep here. So if I was trading this on the 1 minute, what I'd be looking for is some kind of liquidity sweep on the 50-minute, and that is still holds true 50-minute entries. So we get a push down all the way, that's probably got to be what? Could come at 12, 15 pips, yeah, so 13 pips. So we push down, we sweep the people that have seen this and perhaps started to sell early. So we sweep all them, we take them out of the market, and we get this big rally to the downside to complete the change of character. Now, what we actually get is a minor breaker structure on the 15-minute. We get some more early sellers swept. This is a break, but we have this immediate bullish engulfing close back to the downside. So it is essentially just a one candle close, a liquidity sweep. Another breaker structure to the downside. But what we can also see here now is a demand zone, a reaction to this. Let me just move this for a minute. We get this reaction. This candle here is the reaction to the demand zone. We essentially break this demand zone, so I know now that's a valid flip zone. So the extreme is swept, so the flip is valid to play out. And what we do is we get this little chain here. So 1 mitigation, 2 mitigation, 3, and on the 4th one is where I decided to enter. I probably would have entered up here if this had closed below, but this is the one that chose to close below. So I entered off the next valid POI here. Now I've got this black line here to show where I wanted my stock to at least be above there, because that's where I guess liquidity would be As this is playing off the flip zone, we might get a flip in here and say come up to something on the lower time frame that might be up in there. So I want my stop loss to be just at least above there. Target for this, as we're trading off 4-hour bias, is to be the 4-hour low. So the 4-hour low is our initial target. A break-even point for this trade, normally I break even at structure here, but what I did was just not sure what happened to the recording there, but let's continue anyway. So what I did is I had this low as my break-even point. Essentially, just because this is the next point where price might decide to sweep and move up from, if that's what price wants to do. So I took the break-even down there, but before that, we did get this other setup. So we've got as well what is essentially another flip zone that is part of the chain. So I've seen this little POI here, and I decided actually I'm going to enter. It was more like because I thought price was going to come up a bit higher because we've had no liquidity sweeping this. So I assume this would become liquidity, but this is where I wanted to make sure I've got my entry at least on the bottom of this POI. So I've marked it on. Cover the highs again, just in case this POI decides to get swept, just in case this decides to get swept. I mean, this isn't exact. I think I put it, it's probably a bit higher than that. What's that? Yeah, it was definitely at least sort of, yeah, because it was a 4.5 hour trade. So, yeah, give it a couple of pips to breathe above there. Again, another breaker structure to the downside. And there was a third entry, but because, I've been in this trade now for what? A day and 8 hours, which is a bit long. I'd like it to have ran a bit sooner. I decided not to put this one on because if I took a loss, that's a 3% loss essentially. 2% I'm happy to risk over 2 days, maybe not 3%. If these were break even, no problem at all. What you can essentially see is there's 3 nice solid trades here. One ran for 4.85R. I did take them a little bit early, just at this demand zone, and then one ran for 4.5R as well. So very easy, very simple to understand. No lower time frame bullshit. No lower time frame, psychology. There's no, getting swept, but then runs to your POI anyway. If you're wrong here, then you're wrong, and that happens, of course. But it's disheartening when your narrative is correct and you didn't find an entry because you were being greedy on the 1 minute, trying to, you get $1,000 a day and prove you're the best trader in the world. So yeah, that's really it, guys. Nice, simple, and easy work. Trying to get rid of the noise, spend less time at the charts, essentially. I will be building a full plan for this. I've only just started trading like it, so I'm still figuring it out really myself. Figuring out what's best to do, when's best to take trades, and of course I'm trading a lot of different pairs. So it's not the easiest thing to figure out, but it's certainly a lot more peaceful trading this way, I might say. Anyway, guys, off and Ace of Trades. I'll catch you in the next one.